The German DAX supported by ECB rate cut expectations and strong performance in green energy, but faces risks from stagnant domestic demand, geopolitical tensions and US-China trade pressures. Short-term trends hinge on Eurozone inflation and central bank signals. The Japanese Nikkei, buoyed by a weaker yen, strong corporate earnings and the Bank of Japan's dovish policy. However, global market volatility and geopolitical uncertainties could impact future growth. G'day folks, welcome back to another update, and today we're looking at the German DAX and the Japanese Nikkei. Before we go any further, make sure you hit that like and subscribe button to support the channel, and stay to the end of the video to see what we offer on the Patreon page. So here we got the trends first off, the monthly, weekly and daily trend charts, and we look at the CCI 150 as predominantly our trend indicator. And at the moment, although the price is making new highs this month, this is the monthly chart, we've got a bearish divergence on the CCI 150, and that's still declining. That low is still lower than that. That high is still lower than that high versus higher highs on the price. So expect it to fall off at some point. Not sure when yet, but when it starts breaking towards the moving averages of the price, then we're going to start looking at potential target areas. On the weekly, we also have another bearish divergence, and these are independent from different time frames. So you can see here I've drawn some previous divergence and targets hit on those past areas. And at the moment, we've got another bearish divergence, and that's a target drawn there. We've got a double top up here as well on the weekly. And you can see that still the CCI is still bearish on the weekly and still declining versus those new highs on the price. On the daily, see more closely, we've got that double top up there on off that resistance at 19,668. And again, it's already hit this smaller. We had a bearish divergence back here, almost a double top on the CCI versus higher highs on the price. It fell off and hit our minimum target range between that 23 and 38% level. It touched it there, bounced, and it fell a lot further, down almost to the 61%, but hovered around the 50% level for a while. Then it bounced up towards that key resistance, as I said. Also more closely here, we had a bullish divergence, higher lows on the CCI versus lower lows on the price, and that also bounced, and in this case it's bounced 100% retrace level, again back to that resistance area. If we go to the intraday charts, on the hourly, we only take trade in direction of the higher time frame, and here we've got the daily as a reference. We only go long, so you would have taken a long position there when that CCI broke above the moving average range, and then also when it broke above the moving average of the price there. So you would have taken a long entry, and I like taking closes when it breaks into that moving average range. So you would have taken the first exit at that point there off that candle, so you would have made a few points there, and then it broke above that again, and you would have made a few smaller points on that little gain there. And avoid going long when it breaks into a short position like it did there. So we only take long positions during the, as I said, according to the higher time frame. So avoid going short in that point, and you wait till you go long again when that CCI breaks above the moving average range, which it did there on that candle. And in this case, you'd probably be close to taking your profits in the next hour or two when the trade opens on Monday. For the Japanese Nikkei, now on the monthly, it's actually broken down, fresh breakout to the downside on the CCI. You'll notice as well, there are fresh breakouts on all the time frames, the monthly, the weekly and the daily. So probably ideal time to go short for the Nikkei at the moment. It actually still above these moving averages on the monthly, so just be careful about going too heavily short. But at the moment, the monthly is in a short positioning, even though the price is pulling back slightly. On the weekly, if I zoom out on this one, we did draw this Fibonacci retracement of that longer time frame bearish divergence, you can see there, and that broke into that 23-38% level, then it bounced out of there. So it's already hit our target, so I'll remove that Fibonacci, and that's on the weekly. But notice the CCI is still dropping off, so short entries only on the daily, at least if you're trading in accordance with the weekly time frame. On the daily, we did have a bearish divergence back there. That was independent from the weekly. The price was then moving in line with or the CCI is moving in line with the price. And at the moment, the CCI on the daily time frame is actually still bearish, although it's pulled back slightly in the last couple of days. And it may possibly break above that moving average range. It's a very narrow range at the moment, but again, just be careful of trading on this one. On the intraday time frame, we go to the 1 hour chart. So again, this could easily break above that moving average range on the daily. And if that happens, then you take long entries on the 1 hour. Otherwise, if it breaks to the downside again, more decisively, then you take short entries. You'll see here the CCI and the price are a bit undecided in which way to go in accordance with the daily. So just be careful about going long or short until we see more of a, I suppose, decisive move on the daily at least. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again and see you in the next video.